All right. Ricardo, welcome. So good to have you here today, interviewing a mega entrepreneur, finance guru, Mr. Ricardo Pero. Is that how you say it?
Yeah.
Okay, excellent. So, man, good to have you. I'm really glad you can make it.
Great to be here. Glad I could make it.
Okay, great. So, the reason I wanted to bring you on is because, we're doing this show and it has all these e-commerce entrepreneurs, guys who want to make money online. And honestly, in the world that we are in, Amazon FBA, Amazon private label, there's a lot of cash problems, in general. And I've seen you've made an absolutely amazing resource for people, right? Sellers funding. And you are a co-founder or founder?
Co-founder.
Okay, excellent. And so could you tell me, first of all, how did you start in this business? Like, what made you even want to help? I don't know if you originally wanted to help e-commerce people or how the journey was.
Yeah, so when you think about how I started, it's first was a personal decision to leave my old job. I spent like 20 years working for big banks, 7 years, 8 years at Citi, 8 years at JP Morgan, some years at Bank of America. But when I left JP Morgan, I knew two things. I knew that I wanted to do something different with my life, but something that I could leverage my experience, but also learn something new. And during 6 months or so, I ended up doing some consulting jobs here and there. And then a friend of mine called me asking for some help. He moved from his own website to Amazon, and he saw his sales jump from like 50,000 a month to 500,000 in like 3 months.
Wow, that is amazing.
Yeah. And then he called me and said, Ricardo, I mean, everything that I planned, my budget, gone. And not only that, but my margins are good, but Amazon is holding my payments. And I don't know why. I need to understand why. And I'm going to need access to new capital. I said, fine, let me see what I can do. And by the way, full disclosure, I've never worked with a small business prior to that. Wow. I mean, I always work with like multinational companies, hedge funds, and so on.
And what level is the small business? Like, how much revenue is considered small business in your eyes, or maybe the official definition?
I mean, I would say if you are a $10, $50 million, up to $50 million in annual revenue, you're still considered like a micro loan.
Okay. 50, right? 50 million in revenue, or 50 in loan. Okay, in revenue.
No, 50. You're still considered like a very small business. Okay. I mean, we have companies with hundreds of millions of revenues still considered small business.
Wow. Okay. So first time you work with somebody so tiny.
Yeah. And that's it. It's actually interesting because when you look at the majority of sellers, online sellers, they fall into this. There is a gap because you're not eligible to work with business units from big financial institutions, and you're kind of in this limbo because you want to work with someone that understands your business, and probably going to be assigned to a relationship manager that handles your personal account. So you're not having a conversation with someone that understands small business, and it's kind of weird. And
that would be in the bank world, right? Traditional bank. So let's say I started at Amazon. I went from 50,000 to 500,000, like your friend. The next day I want some money. I mean, I don't think there's a bank. There's not a bank in this country that will lend you money. I mean, I don't know that I know of any significant.
No, banks they work they have this credit model, and if you don't fit the box, you're out.
Mm-hmm,
right?
Mm-hmm.
They will ask for personal guarantees. They will ask for receivables as a pledge, as a collateral, and usually it's going to take them months, and the usual answer is no. Right? And then more recently, you have the SBA stepping in, especially now during this crisis, but it still is not ideal. And one thing that people forget is one of the key aspects of the SBA loan, especially this more recent programs, your business needs to be negatively impacted by this whole crisis. And I mean, e-commerce is quite the opposite, right? Most of e-commerce sellers, they've been positively impacted by the crisis. But that's a different conversation.
Yeah, a different thing. And I have seen that, right? And so, I mean, it's, you could get around that, right? Like, in Chinese New Year, it was very tough to get inventory because COVID and whatnot. I mean, but again, it's, I definitely know what you're saying. Like, the gist of it is people who are in a really bad position are the ones who get the funding. So then e-commerce guys would be out, right? I understand that.
Yeah. But yeah, banks, so going back to your question, banks, usually they're very slow and they work in this box and they don't understand e-commerce.
Okay, so then back to the story then.
Yeah.
Your buddy, he needed this money. All the guys were saying, like, we won't work with you, I guess, or I don't know if he was asking them, but he went to you knowing that you came from the finance world and said, hey, I need some money. What can you do? And then how did that go? So
I went to talk to banks, no go. Then I went to talk to a few MCA and some online lenders.
What is MCA? What's MCA?
Merchant cash advance companies.
Oh, like a cabbage?
Like a cabbage, for example. But then when you do the math, even though they announce, we're going to charge you 1.5%, 2% monthly, but that's quite not right, because talking about them specifically, they upfront a lot of fees. They upload a lot of fees upfront. And when you do the calculation, the math calculation, they will be charging you 30, 40, 50% a year.
Yeah, well, you're talking about cabbage?
I'm talking about most merchant cash advance companies.
Yeah, they charge a lot of them.
Yeah, they charge a lot.
Yes.
Then I thought, okay, there must be something in between, because banks are slow. They rarely approve. And then you have these very expensive alternatives. The something in between that I found was Amazon lending. But Amazon, you cannot apply for a loan. You need to be invited, right? So, and that in your relationship is with the push of a button. There is no one that understands your business.
Yeah.
Right. So, and if you have a new product line that you want to launch, or if you're growing to a different marketplace, Amazon is looking at your business within Amazon. If you have a successful Shopify store, or if you want to grow to Walmart, Amazon doesn't see that. Actually, so I thought, okay, let's think about it. And long story short, I finalized that consulting job. We ended up raising capital. He ended up selling a stake in his of his company to a number of investors. I helped back them to approach these investors, and the company took off.
More than the 500,000.
More. They end up opening 5 new brands, and they expanded to, I'd say nowadays, those brands combined, they are selling probably around between 30 and 40 million.
Annually, not a month, right?
Yeah, annually.
Okay. Just talking, I was like, whoa, okay, good.
Maybe not yet.
Not yet, that's right. Yeah. Okay, awesome. Well, that's fantastic. I mean, that's a great That's a great success. So you're able to do it. But at that time, there was no other platform. So the one option, he had to sell part of the company. It worked out for him or her. So, I mean, that's great.
And then,
so good job
for helping. And then after I finalize, I look at the opportunity and say, man, I called them, the owners of that company, and I said, I'd like to build a model that takes into consideration sales and sales forecast. Why is that? Because if you look at the paying cycle that Amazon has, you're receiving money every 15 days. But most sellers, they are sourcing their products from abroad, right? And you need to make that down payment, wait another 60 days for the product to arrive, go to an FBA center. Then 15 days later, you're going to receive your first check.
Yeah.
So we're talking about, best case scenario, 60 days, worst case scenario, over 100 days.
Yep.
And if you want to advance that cash flow or use that cash flow as a collateral for a loan, you're stuck with 15-day cycles.
And when you're looking at this, what time was this this whole operation with your friend, the financing? Now you're looking at this opportunity. What year is this?
I'm talking about 2016.
Okay. Wow, that's pretty recent.
Yeah.
Very good.
Yeah.
Okay.
Then in early 2017, what I did, I my partners and I, we first hire was a chief data scientist. What we did was we start modeling using data from their stores. We start that model, and then mid 2017, once the model was done, and we raised a small round, another round, and then we start literally picking up the phone and calling sellers, calling people that we know and asking for referrals and
for loans. At that point, you're already soliciting. Hey, we'll loan you money right away. So you got the funding mid 2017. You got some money, and
we start testing the model.
Let's give it. Okay.
Yeah. So by February 2018, we stopped. Okay, we lend out like 50 loans. Let's see, see results. They can pay them back. Yeah, let's measure our results, see what can be done better, and then we were investing into an automation model. That was the first time that we launched the first version of the Sellers Funding app. With that, between February and June, we did a mega launch, because like a broader offering, already incorporating Shopify into the picture as well. And since then we took off. But it's crazy because we look at 2018 and we did well. And you and I were talking a week ago, and I said, well, it's crazy because in August we did more than we did the entire year in 2018.
Wow. August 2020, amazing.
Yeah, 2020. And we're talking about this quarter, third quarter of 2020. We're going to do the same amount or even more than we did in the entire year in 2019.
Wow. And when you mean more, that means like the fee on the loans?
Or loans amount disbursed.
Amount disbursed. Okay.
Yeah.
Amazing.
That's another thing that we learned and we evolved with time. In 2018, 2019, we were pretty much funding our operations with our own money and a couple of credit funds and some high net worth individuals. In 2020, we signed up for a big credit facility, a multi-currency credit facility that also allowed us to lower our cost by about 3.5%, 4%. and we pass that benefit to our clients.
Wow.
Not only that, but we also increased our limit. We had a limit of 250,000.
Mm-hmm.
Nowadays, the limit is about $1 million. The official limit is $1 million, but we have in some cases clients that have multiple brands, and they perform extremely well. So we take a look on a case by case basis.
And so, can you tell me now? Obviously, fast forward, you've done now a spectacular amount. I mean, I don't think financial institutions grow this fast, this quickly, and I don't know very many of them, but I'm assuming you guys did it extremely well. Mm-hmm. Now, could you tell me the ratio, right? I would assume, banks, the reason they don't want to do this is they're expecting a lot of people to default. They go, well, you haven't been in business 3 years, so you're probably going to go out of business. They're using the statistic of, whatever, 80% of businesses fail in the first 3 years and whatever, all this stuff, right? So how many, if this is public info, how many like delinquencies or like unpayments out of the whole bunch are you seeing?
No, this is, we work with a number that is well below average from our competitors.
And competitors meaning like the sort of a cabbage kind of deal, or you mean like banks?
So there are 2 online lenders that are listed in that have their shares listed. One is OnDeck, the other one is Funding Circle.
Okay.
So that's public available information.
Okay.
If you look at them, they probably work with a number that is north of under normal circumstances, I would say around 10 to 12%.
Delinquencies, like the loans that they don't get back.
Yeah.
Ouch.
And more recently, I don't know what that number is.
I think it's pretty high.
Yeah, and that's probably why OnDeck was acquired, Cabbage was acquired. So I don't want to speculate on some
what the
other
number is now, but
private companies, but
okay,
yeah. And in our case, we usually deal with something around 2.5%, between 2.5%.
So that's like basically a five times better, and that's probably why your rates are 5 times better. I mean, honestly, like starting at I'm looking on your LinkedIn or the website, it's starting at $14.99, right?
Yeah,
that's about like an Amazon lending, like you're saying. That rate can make sense. Like Cabbage, I've seen the APR, things like that. If you don't have good credit or whatever, you can get up to 120%.
Yeah,
APR, which I don't know how that's not like loan sharking, because I guess it's not a credit card. So again, I'm not into the legal aspect.
It wasn't listed loan sharking. But
it was loan sharking?
Yeah, it's kind of, yeah. But that's...
Isn't that illegal or no? It's not illegal to do it?
Yeah, I if you ask me, for me, it's illegal, but maybe they find ways to charge that, and I'm not here
and get away with it. Okay.
Yeah.
Based on the law, not like immoral or like unethical, but just like literally.
It's unethical for sure, but that's the other thing. What they claim, they're not lending.
Oh, really? They say they're not lending.
No, it's not. If you want to charge that amount or that high fee, it's a fee, and it's a cash advance. It's not a loan. That's how they get away.
Oh man, there's somebody. I mean, these lie. I mean, come on. But I mean, in a way, look, I don't like them. I've never liked them. I know. I actually went to take a loan from them once when I needed money, and I saw and I was like, this is weird. It's like a 25% total cost over 6 months. I was doing some math and I go, whatever it was around those figures. And I go, this is ridiculous. And then I checked and the APR levels, like a low APR for them was like 50%. And I go, wait, I think credit card companies, if they try to do that, over 22% is like a loan shark and that's illegal. And I go, how? It didn't make sense to me. And, in ours, I go, like, you have to be really good to pay that back comfortably and feel good about that. Like I couldn't. I'm very aggressive when it comes to Amazon, and I love launching products and adding. And I'm all about the return on investment, ROIs on all the products, and we go for 100%. We do all these different things. Even me, I'm so aggressive. I couldn't get myself to that level of loan. I couldn't. I just said, I'd rather just raise prices, run out of stock, or not add products, then do that. It's so much risk. It's already risky starting a company, but we're starting it with at 100% interest rate. I'm like, geez.
Yeah.
So thank you for not doing that. Thank you for keeping competitive stuff.
The $14.99 is outdated actually on my LinkedIn, and thanks for reminding me that we lowered our minimum to 12.5%.
Wow, amazing. That's fantastic. And I've taken an Amazon loan, I believe, for $14.69, $14.99, and Amazon lending has saved my butt like a lot. When we needed money, the only guys that were there, the banks. I think the bank at one point loaned us like 100,000. Even SBA, they would do 100, and then Amazon at the same time period, like 100,000 is closing. Amazon's like, hey, do you want 750? I'm like, hey, bank, like, do you want to see Amazon will loan me? If Amazon will loan me, I think I'm low risk. What do you think? And they they can't look at it. So I really think there's a big gap there. And I actually took a loan from you guys, I believe last year or something like that, for about 100,000. We had never met at the time, but it was amazing because I thought, hey, if Amazon lending doesn't have a loan out for me, the next best option would be sellers funding. And now it's getting even more competitive because I think when I took it, it might have been, we took like an 18%, something like that. And it worked for me. It solved the problem. It's not loan sharking. It made sense. You looked at my store and I took way less than I was offered. But it's just, I feel that especially for people that are not available for Amazon lending, which I think if you're abroad, some people can't have Amazon. Like there's some companies that don't go for Amazon lending. Can they go to you if they can't?
Yes, absolutely. Yeah. And that's another thing that we were talking. We added now a digital wallet into our offering that allows foreign sellers to direct their marketplace payouts to that digital account. And based on that, we can lend. We can lend them money. We can advance money. We just launched a daily advance product as well. So ideal for retail arbitrage guys that need that cash flow to have this high volume trade. We offer that as well. So when you put things in perspective, the company has evolved from starting lending strictly to Amazon sellers, diversifying into multiple platforms, and now not only multiple platforms, but also diversifying to other countries. We have clients. We did our homework, so we are in compliance with regulators in Canada, UK, applying for multiple countries in Europe, Australia. So we have clients based elsewhere that are selling here in the US. And we offer this banking infrastructure, that's almost like a virtual banking infrastructure for them. And soon, I would say in the next 60 days, you're going to see us extending that offering for US companies selling abroad. We'll be covering and offering the same service that we offer to foreign sellers selling in the US. We're going to offer in Canada. We're going to offer in the UK and Europe.
Beautiful. Now, tell me, from what you've seen, right? I don't know how much you interact with the sellers, but what kind of impact do you think this has had on sellers? If people have written to you or you've talked to them, what do you see all this money going out into the market, right? I think on your there was 7,000 loans, a lot of loans going out. Yeah. What impact have you seen from that?
No, it's amazing. The other day I was talking to a client of ours who started with us in 2017. The first transaction was that we extend to him was a $50,000 loan. And fast forward, we are talking probably about our fifth or sixth transaction, and he has a $1 million line of credit with us.
Beautiful.
So yeah, we grew together, and that's kind of that's our mentality. We don't want to see we don't want to be perceived as a lender of choice. And many times, like my friend back then, he had to sell a piece of his company to get funded. I mean, why you need to sell when you're starting? You know, I'm an entrepreneur. You're an entrepreneur. You know extremely well that probably the most expensive capital that you're gonna have is selling your equity.
Yeah, it might be worse than cabbage.
From the beginning. Yeah,
might be worse than cabbage. You know,
hold that. You know, get funded, and we're gonna be supporting your business from 100,000, 200,000 to $1 million in credit limits and multiple products, multiple locations. And by the time that you hit that 10 million, 20 million, $30 million in annual revenues, then you start thinking about selling a stake, reducing your cost of capital. It's a different situation.
I agree.
Not only that, but during this time, we're going to be reporting your payments to Experian. So your business, you kind of detach your personal credit score to your business credit score.
Oh, I thought that the business credit score was only with like a Duns and Bradstreet or something like that. Experian actually has a
Experian has that, and we develop. So we have this partnership with Experian. Experian has a score called IntelliScore, and we've been reporting to Experian all payments. That helps your business to build a strong credit report with Experian, so you can share that down the road with your potential investors or banks.
Oh, nice. And can you pull that? Like, how do you get that info?
So
if you don't know, it's fine.
I pay for that info.
Okay.
And we have.
I mean, me as a business owner, like if I want to know my score,
I need to. I will get back to you with that information. I don't know. Top of my
head. I mean, maybe it's not even important, right? I don't know. Just curious. Okay, and then another question. So, in terms of Shopify versus Amazon, right? There's the initial story of this guy who was selling 50,000 went to 500,000 just going to Amazon. Now, maybe that won't happen right now in 2020, but I definitely think it can. Do you have any stories, right? All these, I know a lot of Amazon sellers, right? And Amazon sellers listen to this podcast, and they know, hey, Amazon's all my money. Most people have less than 5% of their sales on other places. Have you seen any success of Amazon people going to other marketplaces, other things, and having success?
You have, I'll say, it really depends on your product. You have a strong brand. So in order for you to create a strong presence in social media, because that's going to be the key. If you want to be successful with your own website, you need to have a strong presence in social media, right? If you have that, then your chances are good that you will be successful there.
Okay.
But we are seeing an interesting uptrend with Walmart.
Oh, okay. All right.
I would say most clients that I talk, they have high hopes with Walmart. The numbers are not there yet. I think the platform has still some limitations in terms of how you can optimize your listings and invest further. But I think Walmart is a big bet from most sellers.
You're seeing the payouts or the sales numbers go larger on the Walmart.
Yeah.
Okay. And that's good to know.
As a direct competitor for Amazon. Shopify is not a direct competitor. I think it's an extension of, and especially if you have a strong media presence, then your chances of succeeding are high.
Yeah. And then what about your percentage of, let's say, loans, right? You start off Amazon. What percentage of people are, very strong on Shopify and not strong on Amazon? Or the guys that are getting their loan based on their Shopify sales or their own website sales?
It's interesting. About 2/3 of our connected tokens come from Amazon and 1/3 Shopify.
Oh, wow.
But it's not exclusive. If you look at we run on a monthly basis a report here that shows average growth of our clients, and then you look at clusters like Amazon only, Shopify only, Amazon and Shopify, Amazon, Walmart, and Shopify. And so the cluster that grows the most is a combination of Amazon and Shopify.
Interesting. They have the highest growth.
Yeah.
And to be considered in that Amazon and Shopify, does it just have to have a store? Like even if you're only selling 0.5% on Shopify, you're in that category. Okay.
Yeah.
I mean, we're in that category, but we're so small in Shopify, it's ridiculous. I mean, but it's okay. And so 30% just means they have Shopify, or that means they're primary Shopify. The 1/3 of the tokens.
They have a Shopify store.
Okay. And then
that doesn't mean that they only sell through Shopify. Correct. I would say the majority, they sell in multiple platforms, including Shopify.
Okay. And do you have a number of like how many people have stronger Shopify than Amazon?
I don't.
Okay. I would love to know that number because, of course, like I would consider myself purely Amazon seller. I think we have maybe less than 1% on Shopify, but I have my Shopify connected. It's almost like, hey, in case somebody, some people want to boycott Amazon for whatever reason. They go, I don't want to buy an Amazon. They'll go buy in my store or something like that. But the majority of people, you have Prime shipping, you have everything. So I don't consider myself a very pro marketer at all on our website. And so, I'm just curious, like there must be people who are only on Shopify and anyway, whatever. I don't care that much about Shopify. I think Amazon's where all the money is, $400 billion. Yeah. I mean, there's plenty of market. So what is next for Sellers Funding? Where do you see you guys in the next 5 years?
Yeah, I see ourselves with the expansion that I mentioned to other countries. Providing this marketplace payout service to other countries. I see ourselves probably doubling in size again. Not again, but we are quadrupling in size this year. Wow. Pretty much. I would say that we're gonna double in size just because of that in the next 6 months. And we have a few cool products and partnerships in place. One new product launch that we are about to announce in the next 45 days is our new prepaid card. And it's going to be a combination of, it's a card that will have features and some cashback features for users, but also will offer some cool like perks and discounts.
Similar to like Brex? Something like a Brex, sort of?
So Brex is tricky, and but my perception is that they announced that you have 60 days to pay it off, right? But eventually in 60 days you need to pay it off.
Yes.
So there is no financing alternative. Yeah. If you look at our revenue advance product, you have 60 days to start paying off. And it's not necessarily linked to a card. So, I mean, you got to figure out, okay, you have
the card. How will the card work?
Yeah. So the card will offer a cashback. Will be linking to our financing tools. So if you want to do a daily advance, we're going to offer you pretty much the same fee that you pay on the daily advance, you're going to receive as a cashback.
Okay.
So if you opt to have 100% of the disbursements into the card, it's free money.
Interesting.
The term loan, we're going to link the term loan with the card. So each time that you withdraw from your credit limit, you're going to be converted into a term loan. It's going to be disbursed into a card. We're going to offer you that cash back as well. So it's it's pretty much very close to, or it's going to cover about 70% of your financing cost. And instead of having 60 days to start paying, we start with 12 months amortization, start with 90 days interest-only period.
Nice.
So it gives more flexibility than other cards.
Very nice.
So that's on the card side. And also we have our partnership. So we have a partnership with Helium 10. Alta by Helium 10 is a product. It's a combination of our efforts with them to develop this platform. We will be announcing between now and year end a number of partnerships with shipping and trading companies, offering like a PO financing solution out of the shipping and shipping company platform. And those
like a freight, right?
We
like
see a trend.
International shipping. Okay.
Correct. We see a trend now where Amazon is imposing a lot of restrictions and creating new rules, raising the bar for FBA. And we see a trend where shipping and freight forward companies are growing.
Yes,
growing
and they're charging
in
more
size and in relevance. Yeah. So we'd like to partner with some of those companies and offer, financing solutions for clients in an automated way out of those platforms.
Okay, awesome. And then, so now you're dealing with a lot of sellers, a lot of guys connecting. Let's say, someone listening to this, they are selling on Amazon. Maybe they're kind of getting started. At what point do you consider somebody, what are the minimum qualifications for somebody to apply for a loan from Seller Funding?
Yeah, 6 months sales history for the credit limit, 3 months sales history for the daily advance. That's all we ask. Then on the credit limit, we ideally we'd like to see someone pre-qualify for $25,000 or more.
And do they qualify for $25,000? What does that put the revenue at? Or
I would say around $25,000 in gross sales.
Okay, so
in a month. Consistent gross.
Consistent
gross
for
sales.
for 3 to 6 months. Or 6 months for 6 months
for the credit limit.
$25,000 a month for 6 months, and then they can go to you basically.
Yeah,
around there
for the credit limit.
For the credit limit.
Yeah, for the credit limit.
Daily
for the daily
advance is no problem because it's already there, right? Yeah.
Yeah.
It is a lot easier. 3 months. Okay.
Yeah, and then what's interesting is that once we start with the daily advance, we create a track record. It's kind of helps you, supports you to grow and to reach that $25,000 threshold. And then with that, we can combine both products.
Okay, interesting. And I want to mention, and for guys who are listening, I'm going to just talk briefly about my thought process on taking loans and taking money. Right? I know business owners and entrepreneurs on both sides of this sort of spectrum of like, I will never have a credit card or a loan ever in my life, ever. Right? There's that level of like, I'm never touching credit. I'm not going to open a credit card, or my business will never have money, and that's success, right? And I'm not going to criticize those people because each person, they're living their own life and they have their own risk tolerance, right? Now, there is a level of, I'm going to take as much money as possible and loan and get as many loans as possible. Like there's a sort of spectrum, right? And I want to mention, right, a couple of very successful companies, have taken loans, right? Like large loans, and even Apple, they have $200 billion in cash on their balance sheet, and they still take loans. That's correct, right? I mean, you're familiar with this a little bit. Okay. Yeah. So they're taking loans and they have cash. You go like, what? Listen, people, don't understand. A lot of people don't understand that debt is part of a business, right? Because everybody's making their cut on the spread of the numbers, right? In Amazon FBA, a lot of guys, we have an opportunity to double our money, right? You get a product for $10,000. When you sell off that product, you can make $10,000 in profit. Right? You could turn that product 2 or 3 times in a year, which means with money, and of course, if you take ad costs and other stuff, but let's say you're the single operator, you can triple your money in 1 year. So you put $10,000, your profit can be $30,000. So you go, okay, rather than do $10,000 on a product one time, you do $10,000 on a product, you take a seller's funding loan, let's say for $10,000 or let's say $25,000, right? And then you put that into a new product, and instead of making $30,000, you've now made whatever, $110,000, and then you pay what? You pay $5,000 in fees, and you go. For me, the math game
less
than that, exactly, less than that. So your total cost sometimes can be as low as what, 8%, 9%.
Because it's an amortizing loan as well. So you don't take the $25,000 throughout the entire year.
Yep.
You need to take into consideration what's the average balance of that loan.
So it could be $3,000 on a $25,000.
The effective cost will be $3,000.
Right. So you just got $25,000. That $25,000 you can make $75,000, right? And pay $3,000 in interest. I go like, okay, loans to me at this level, at the interest rate you're talking about, with the opportunity we're in now, for me the risk is so small. And again, you have proven this in your model. You're having a less than a 3% delinquency rate, which means, listen, the chances are, if you know how to sell on Amazon, you take money out, you will do well. And by the way, on that, they're mostly the smaller guys that are doing it, or are there some large sellers? Like what's the spread of the guys who like, oh my gosh, I don't know, my account got shut down. Is there anything like that?
It's a wide range.
Okay.
We have, from 25 to a million and five. So.
Ooh, yeah. So a lot of different people. So now what I'm saying is, if you can go, there's a risk level, but what I tell people and when I teach people about Amazon, I go, get a success rate. You should understand what your success rate is on launching products, right? You maybe launch 2 products and see what happens with those 2. If you're successful on both of them, go get 2 more, like do 4. Can you do 10? And at some point, let's say you did 10 and 8 of them did well, you go, listen, if you do the math on that, if you take a loan and instead do 15 rather than doing 5 and 80% of them succeed, you will succeed. So I'm not saying take money irresponsibly, but run the numbers, because in the finance world, the US has some of the cheapest interest rates. If you try to go borrow money in Mexico or borrow money probably in the UK, some of these interest rates are so much higher. In this country, we have opportunity. We have entrepreneurs like yourself bringing opportunity to other people. And I encourage people, I'm going to have a special link to sign up. If you do want to get money from Sellers Funding, go to aaroncordovez.com/sellers funding, and you can apply through there. We'll work out some sort of deal. So hopefully those are good guys, right? They're listening to this. They know they'd be responsible. And check it out. Apply through there, because, guys, if you are succeeding on Amazon, if you have 1 successful product, try to multiply that. Try to do 2. Do you succeed at 2? Try to do 4. Okay, from there, go to 6 or go to 8. But I've seen over and over, adding products will bring people more cash if they're doing it correctly. Don't go from 2 to 100 products. Don't be crazy. Don't take a $500,000 loan from Sellers Funding and add 500 products, if you haven't done already 400 products, right? So I just see this as a humongous, tremendous opportunity. Guys who are, bootstrapping, don't have venture capital. They're starting with, they're already doing $30,000 a month. And you can get money at $3,000 a year to have twice as much capital. So I really urge people, if you want to grow, I've taken money from Sellers Funding, Amazon lending, but at decent interest rates that you can pay off. Even if your product does terrible, you were going for 100, 200% return, you get a 50% return, you do it twice, you've doubled your money and you pay 10%. It's like ridiculous. Anyway, that's just a little message for anybody listening to this. I recommend be aggressive, because unless you believe you will fail, unless you have a history of failing, right? If you launch your first product that fails, don't try to go get money, right? Bootstrap it as much as you can until you prove the model, and then go for money. I really appreciate you having that opportunity for people.
Great. Thank you. Thanks for having me here. It was a great chat.
Thank you so much. Have a great one.
Thank you, man.
Bye-bye.
Bye.